Futures trading is risky and can result in substantial financial loss. Never put a futures position on without a stop-loss order in place.
Good morning, good afternoon, good evening, traders from all over the world. Welcome to Short-Term Trading Live with Oscar. We're talking about trades for trade date, Monday, Tuesday, right? Tuesday, 123.07. Let's talk about what happened today. If you were in there in the ring with me, we got hit, but we can take these punches. We were buying 1434 and a halves in the S&P. They knocked them down on us, took out our stop, didn't cost us too much. Ding, ding, round one's over. We're ready for round two. Let's look right into the S&P for tomorrow. Tomorrow, we're going to sell this bad boy. 1435 and a half. Place your orders. Sell March S&P. 1435 and a half. Place a 1439.75. Buy stop 70 for the S&P, guys. 75 buy stop for the E-mini traders. We're going to look to take profit at 1420 and a half or be out by the close. Again, buy them at sell them at 35 and a half. Place at 39.75. Buy stop in case we're wrong. We're going to take profit at 1420 and a half. That should be a nice one. Let's see what happens on that. Gold. Well, we talked about gold a little bit earlier in the week. We said if it got down to that 23, it would rally to 42. Today it tried. It got up right into that 40 zone. It couldn't make 42, but maybe that's the whole move. So to capture what should be coming next, we are short-term traders, right? We look for the short-term in, short-term out. We're going to sell the gold at 638. Sell Feb Gold 638. You're going to place a 642.90. 642.90 buy stop. In case we're wrong, it gets up in that 42 area, takes us out. We don't want to be in the gold. We're looking to take profit at 624 and a half or be out by the close. Again, sell your gold at 638. Place a 642.90 buy stop. Look for 624 and a half or be out by the close. We also like the beans. You know we have this crazy stuff going on right now with the grains, especially that corn sitting there. And we're going to talk about the corn. We did the corn challenge. I didn't forget you guys. We're going to look at the beans today. But I have a feeling that they're going to take them down a little bit. So to capture that, we're going to sell the March beans, ZSH7 electronic, if you want to do the electronics. And you know I like placing all my orders in the electronic markets at night. You should do the same. Electronics are a good market, good place to place your orders. Sell the March beans, 720 and a half. You're going to place a buy stop, 724 and a half on a stop. And you're going to take profit at 711. Be nimble with the grains though, because at any moment that corn can go. You got to be really careful. I'm looking at the gold ratio, the gold-silver ratio spread. There's a spread out there where you take the price of gold, you take the price of silver, and you divide one into the other. You divide gold by silver, and you have a ratio. That ratio used to be in the 80s. It's trading right now at 49.39, 49.39 contracts of silver to one of gold. I think it's going to go all the way to 45. That is silver up, gold down on a ratio spread. You may want to look into that. If you need more information on ratio spreads, give me a buzz. I'll let you know about that. Now, I'd like to say the letters that have been coming in on this corn challenge, you guys are tremendous out there. You guys are unbelievable. I'm getting letters from everybody. Some of the best technicians I've ever heard from are writing in letters. Well-rounded, well-sounded, well-thought-out technical analysis of what they're seeing. And I tell you, it's fantastic. I must say I've done my own homework. I am a student of John Murphy. This is the book that I mentioned, and I'll give you credit on this, John. Don't be mad at me, but hey, it's your book. I wanted you to take a look at this because this is a fantastic book. I call this the Bible. I'm not looking to sell anything here, but if you are looking for a book to study, take a look at John Murphy's Technical Analysis of Fundamental of the Financial Markets. Now, we had this corn challenge that we were talking about, and my helpful assistant drew up the corn chart for me, so of course the bars aren't going to be exact, but it kind of looks like this, and here's what we got going. It's March corn. We talked about the challenge. You guys, out of about 250 replies, I'd have to say it was half and half. Half of you were bullish, half of you were bearish, but you all had fantastic reasons for it, so I have to commend you on your analysis again. Anyway, you have the corn here. We have, as everybody knows, this gap. Well, 399, 396 and a half. 396 and a half here, 399 here. That little gap's been left. Today's market went down, almost filled the gap, came back up and settled. Now, no one knows where a market's ever going to go, but I can say from all the work I've done in the past, this formation right here, whether it happens right now or whether it happens soon, that is extremely bullish. Extremely bullish. No two ways about it. Unless this turned out to come all the way down here and end up in this level, you have the makings of an animal summer in the grains. And you saw Karnak the Caterpillar. He agrees with us. We think these grains are going to go berserk. You heard it here. Watch these grains. We're already seeing the grain action, so I'm not even going to worry I'm sticking my neck out on here. The grains are going berserk this year. I'm not going to give you the actual buy rec yet, but I just want to read you a quick, I did some of my own homework and I ripped out a few things, and there were 3 types of gaps. I know everyone's done their homework on this gap. As far as Murphy's concerned, there are 3 types of gaps. You got a breakaway, a runaway, and a measuring gap. Also we could call them exhaustion gaps. The breakaway gap. A breakaway gap usually occurs at the completion of an important price pattern and usually signals the beginning of a significant market move. After a market has completed a major basing pattern, the breaking of resistance often occurs in the breakaway gap. We've had a basing pattern, we ran up, and then boom, we broke the resistance. So far it's a breakaway gap. Breakaway gaps usually occur on heavy volume. We have the heavy volume. More often than not, breakaway gaps are not filled. We didn't fill that gap. I don't know what else we're going to get here unless somebody comes down and just tells us to get in and get long. So far, they're really giving us a good long here. But we're not done. We still need to do another day or 2 of analysis. Prices may return to the upper end of the gap in the case of a bullish breakout, which we just seen yesterday. We came down. I just showed you on the chart here. We came down today but didn't quite fill that gap. So everything that Murphy says would be a classic breakaway gap we're seeing right here. As a rule, the heavier the volume after such a gap appears, the less likely it is to be filled. Upside gaps actually act as support areas on subsequent market corrections. So if and when we blow off, when we come back down, that gap level is going to be where we're going to find our support. So according to John J. Murphy, who I have to say is about the best analyst I've ever known, and I studied under him at the New York Institute of Finance about 20 years ago, he's calling it a breakaway gap. My work said it was a breakaway gap before I broke out the books. Unless the market turns and goes lower, we have a breakaway gap. Thanks for that corn challenge. You guys have sent me more mail. This is just fantastic, I must say. The letters are great. Please keep them coming. When you're at the YouTube site, hit the subscribe button so that you can get our videos the second we get them out. Remember, hit subscribe. Videos come to you immediately. If you want to get on our flash updates list, and flash updates are essential for getting you out of these wacky trades I get you into, I'm saying, come on, sell this here, sell that, buy this. Well, once you get in, you got to figure out where to get out. I'll get you out if you get on my flash update list. In order to do that, you got to call email futuresanalysts@gmail.com. Say, Oscar, please put me on your flash update list. Boom, it's done. You want to call me, 718-351-2266. That'll work as well. I'll get you right on the list. Remember, be nimble with your trading. We're short-term traders. We don't mind taking losses as long as we make them fast. Good luck, traders. We'll see you tomorrow.
Futures trading is risky and can cause substantial financial loss. We do not claim or guarantee that you will profit from the information provided. That being said, I am a 24-year seasoned trader on and off the floors. This is how I've made my living for many, many years. Good luck trading.